Welcome to the Real Estate Coffee Break, the mini podcast that provides a quick download of information while you're waiting for that first cup of coffee to brew. I'm your host, Colin Clayback, and today we're speaking with Kenny Wolfe of Wolfe Investments, an opportunistic real estate investment firm based in Dallas, Fort Worth, and has a portfolio of roughly 5,700 units. Kenny, welcome to the Coffee Break.
Thanks, Colin. I appreciate it.
Yeah. Well, I appreciate you being on, stopping by, chat with us today. Do you mind giving our listeners just kind of a high level on your background, that 30,000 foot view?
Yeah, sure. So we started over 10 years ago buying multifamily here in Dallas, Fort Worth. Quickly branched out. So now we've done, like you said, 5,700 units over 5 states on the multifamily side. And then about 4 years ago, we tacked on 2 new arms to the company. So we also have a triple net, double net arm that buys dollar stores, Vance Auto Parts, Walgreens, things like that. And then at the same time, went something opposite and just full appreciation. So we started a development arm as well. So we're doing some big projects there too.
Well, being nimble, being agile in the market is definitely a need today, and opportunistic is certainly reflected in that approach. You guys have been very active. We've seen your firm come across on the deal sheet many times recently, and I thought it might be interesting to talk about a couple of your 2 recent deals. I know there's kind of a tale of 2 cities, a tale of 2 deals, right? You've got a Class A deal in downtown Dallas, 400 North Irvay, which is the historic Dallas Post Office building, and then you have Maureen Street, which is the other end of the spectrum, Class D in Wichita Falls, the fixer-upper value-add workforce housing play. So do you want to kind of give us a high level on both and tell us how they came about and how you saw value and how you approached the market?
Sure. Yeah. I mean, so like you said, we're very opportunistic. So I'll start with the prettier one first. So we'll start with the post office building. That one was really interesting. So it's right in the heart of downtown Dallas. Beautiful building, built in 1930s. It was the old Dallas County Courthouse. So that's how it has some historic ties to Bonnie and Clyde. And some other kind of big cases that came out of that courthouse, but yes, right now it's the post office building is still in there. We own 82% of the building. And so we bought 78 really high-end multifamily units. These are the first units of ours that actually have real wood floors. Everything else was faux wood, so it was kind of cool.
No laminate here, huh?
That's right. It's got elevators, all that cool stuff. But beautiful building. We bought it already fixed up. Our business plan is to run it more efficiently. So their expenses were about almost 3 times what it takes to run our typical A class here in Dallas Fort Worth. And then at the same time, the other part of the business plan is we went from bought it through a bridge loan and then are going to a HUD loan to get us that 35-year amortization, really low interest rate as well. So with those 2 alone, tacking those on, it basically performs like a B class on returns. But we have this beautiful downtown A class property that's towered. There's skyscrapers all around us. That's our neighbors. Rooftop deck. I mean, just beautiful asset, right? So
yeah, I've been in it. I had a friend when I lived in Dallas years ago when it was first developed, lived in that building, and it's a fantastic building. It's a great asset.
Yeah, we're glad to have it. And then I guess on the flip side is this D class, and not many people admit that they buy D class, but we do. We're proud of it up here. This is not our first D class purchase, but bought a D class, really horrible property, but the location is great. So it sits right next to an elementary school. It's the direct neighbor, and then across the street is the high school. And then on the direct east side, we've got some, I'd say B class single family neighborhoods as well. And so this is definitely the eyesore of that community. So
sure.
We bought it for $29 a door, so super cheap. But the rehab budget is about $35 a door. So
wow.
Putting in more than what we bought it for. So it's taking it from a D class to a B. And so once we do that, obviously we're projecting some pretty good rent growth. We're getting PACE financing to do new windows. It's going to have all new ACs. So, it's going to be basically a rebuilt asset. to that B class level.
Well, that's a great asset and great find too, right? So no surprise in real estate, location, 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 right? And you can find the beast and turn it into the beauty, and get some returns there for your investors. That's amazing. So what? Tell me, how did both of these deals come up? How did you come by these? How are you guys sourcing these, and how did you guys find it? I assume you have to look at a ton of deals and put pen to paper on several before that you get one that actually is that diamond in the rough. But care to share?
Yeah, sure. So, I mean, we've really gone the off-market route. So probably the past, I'd say almost 3 years, all of our properties have been bought off-market. Being
Wow. Okay.
a known buyer in the space, we get a lot of first looks at properties. Not saying that we wouldn't buy one that was on the market, but typically we've been finding much better deals when we get them off-market. So both were off-market. The post office building was originally on the market in January before COVID hit. And then they pulled it, and then we just happened to reach out to that broker, said, "Hey, is it still for sale?" Anyways, we ended up working out a deal with the owners and bought it as the only one looking at it.
Yeah.
So that was kind of cool. That one that only happened because of COVID, to be honest with you. I think for us to be able to snag that, because usually that's an institutional level style purchase. That being, that historical building like that. So we're glad to get our hands on that one. And then Marine Street, again, it was off market. We've got a great relationship with a broker that goes out and finds some sellers off market for us.
Yeah, awesome. So in the very competitive landscape of Dallas, Fort Worth, or North Texas in general, or just multifamily in general right now, having a track record of being able to close, having a network of brokers who you worked with and rely on and trust, all kind of came together to make both of these deals happen.
Absolutely. Yep.
Awesome. Well, what's the next deal on the horizon? I know you've been traveling all around the country. You guys are in 5 states right now. Are you going to get into a 6th or a 7th?
Good question. So yes, actually, we've got our development arm is really taken off. Obviously, we're doing some ground up stuff as well, but kind of a big move for us was we bought the Rockefeller building in downtown Cleveland. It's an office building, historical office building. We'll convert from office to multifamily. We have probably 4 more office owners that either want us to buy their building or JV with them to turn that from office to multifamily. So yes, we are about to add a 6th state, great state of Georgia down there in Atlanta. So working on that. But we've also got some existing multifamily coming up as well in Cleveland that we're looking at to bring on. And that'll get us almost 900 units of C-class in Cleveland, Ohio, which are great cash flow there as well. So we've got a whole bunch.
Are you seeing the opportunity for the conversion from office to multifamily spike even higher with COVID and people working from home and people, owners just having trouble leasing up those office spaces, or what?
Yeah, I mean, yes. So the short answer is yes. But I just had this conversation yesterday. I'm one of the ones that think most people are going to actually be going back to work because we were discussing in the car ride yesterday that productivity is at an all-time high, but but creativity is an all-time low. So if your business, and I think a lot of IT is a lot of just hammering out workload. But I know our company and others that rely on some creativity and ideas. You just can't get that through Zoom. It takes you an extra week to get stuff done. So eventually, I'm one of the ones that think office will. I don't know if it comes back to where it was, but pretty darn close on that. But we are seeing some office owners feel a little bit of a squeeze, but it won't be that big of a deal because they have long-term leases, right? So if they have a 3-5 year lease on these deals, then it's just bad timing on folks that have big vacancy right now. on their part. But give it a year or two, and I think they'll be fine. So, but we are seeing that though, office owners that are sweating a little bit to approach us to make a deal work.
Sure, sure. Well, Kenny, I really appreciate your time, your insight, and for taking the time to stop by the coffee break. Do you have any parting thoughts?
No, no. I mean, thanks for having me on. I mean, I think hard assets are going to be obviously in bias, but cash flowing hard assets are going to be the better investment going forward. Paper assets, had a great run March and June of last year. So I hope you bought some, everybody.
Yeah.
But from here on out, with the inflation, I mean, it's paper stuff's going to be the loser. So cash flowing hard assets, that's where it's at.
That's where it's at. And if you guys want any information on it, Kenny, I know that you would love to speak with them, and we'll publish your contact information, and they can potentially get in one of your deals or whatnot.
Awesome. Appreciate it. Thank you.
Yeah. Well, great. Well, thank you for stopping by. Again, the Real Estate Coffee Break is powered by Virtus Insurance. We are a national insurance brokerage based in Kansas City. That our real estate practice insures over 350,000 multifamily units and 100 million square feet of commercial real estate. Kenny, thank you for your time today, and we'll be talking.
Thanks, Colin.
All right. Thanks.
Bye.